The 40-year wealth play, it just died. The entire formula that built retirements, pensions, and fortunes for an entire generation, it's over. Now, the painful truth is this: most people won't even realize it until it's too late, because accepting a paradigm shift means admitting everything you've been taught. Decades of investing frameworks, even your identity as an investor, no longer works. That's hard. So people cling to the familiar. They wait for consensus. But by the time consensus comes, the opportunity of the shift has already passed. Now look, I've been selling tech companies for decades. I'm a partner at a leading Bitcoin venture fund. I invest directly into Bitcoin treasury companies. And what I'm about to show you is exactly what the smart money sees behind the curtain. Because if the 40-year wealth strategy is over, then something entirely new is taking its place. And if you see it before everyone else sees it, this could be the biggest wealth shift of your lifetime. So let's go. Okay, so to understand where things are going, let's first look at the system that we're leaving behind, right? The old playbook that everyone still believes in, and of course, why it's dead. Now, if we rewind the clock to go back about 40 years, let's go back to 1981. Now, in 1981, inflation's raging. It's reaching 14.5%, right? 1980, Paul Volcker came into the Fed, and he was going to fight inflation. He was going to beat inflation. He raised rates on the U.S. Treasury, the 10-year, to 15%. This means somebody with a few $100,000 in savings, say you had $300,000 in savings on retirement, you could earn about $50,000 per year to live on. A comfortable retirement back in 1980. But from there, and for 4 straight decades, yields went down. Bond prices went up. Every dip for the last 4 decades was a buy. Every crisis made bonds more valuable. It was the safest trade in history. Retirements, pensions, entire nations were built on top of that. But by 2020, the absurdity reached its peak. The safest investment in the world, U.S. Treasuries, paid so little that it now took $10 million to earn the same $50,000 a year that you could have gotten from just $300,000 before. Now, it was much worse in Europe, where there was 17 trillion euros earning less than nothing. Negative yielding bonds. Now, the same was true in Japan. You had over 30% of the population are retirees that depend on forced income, and yet they were being forced to literally pay the government to hold their money. Now, this wasn't done by a free market. It was 40 years of central bank coordination, central bank regulation, forcing everyone into bonds. But the pin was COVID. It hit. The pin popped the bubble. Inflation came roaring back, and suddenly bondholders realized what their grandparents before them knew, that bonds can lose money. As a matter of fact, they could lose a lot of money. That's why today we now have over $300 trillion in global fixed income. It's all stuck in a trap. Governments can't afford real yields. They can't afford to raise those, so bondholders are guaranteed to be liquidated away. And now the world's finally waking up to this. Even JP Morgan just put out a report. They have a name for it. It's called the debasement trade. Investors are bailing out, right? They're bailing out of fiat. They're bailing out of bonds. They're running into assets that you can't print more of, gold, and especially Bitcoin. And by the way, if you want to go deeper into this shift, I'm going to host a quantum wave investment workshop next week. It's live, it's free, and I'm going to walk through the exact charts that I'm watching. I'll show you the assets, the stocks that I'm buying, and I'll show you how I'm profiting as this old paradigm collapses. I'm going to put a link in the description down below. We'll put a QR code on the screen right here. Grab a spot, because it's free, but space is limited. So I keep it limited so I can interact with everybody. So don't miss it. This window's moving super fast. All right. So why don't most people see this shift, right? Even when it's happening right in front of your eyes. Because although when you hear it all laid out, like I laid it out for you, it seems pretty obvious, right? The bond bull market is dead. JP Morgan is literally calling it the debasement trade. But yet most people still don't see it. They don't see it because of psychology. Accepting a paradigm shift is painful. It creates what we call cognitive dissonance. It forces you to admit that everything you've been taught is wrong. It forces you to admit that decades of financial frameworks, advice, even your identity as an investor, it no longer works. And that's the most painful part, right? Most people would rather stay wrong together than be right alone. I know it sounds crazy, but it's true, because humans rely on pattern recognition. We assume the future looks like the past. And so because the past was 40 years, the pattern was simple, right? Buy bonds, trust the 60-40 portfolio, don't fight the Fed, Now that script is sort of hardwired in right now. It's hardwired into the advisors, into the pension fund managers, and it's even wired into your dinner table conversations. But when the paradigm shifts, those old rules become traps. Yet people cling on to them, right? They want to hold on to them either way because they're familiar. They feel safe, even when it's broken. And then there's the consensus problem. Most people wait for consensus before they believe something. But by the time consensus forms, the opportunity of the shift, it's already passed. Now, history is full of smart people that miss these paradigm shifts in real time. Nobel Prize winners, CEOs, the media. I mean, some ones I can think of, Paul Krugman, right? He's a Nobel Prize winning economist. 1998, he said that by 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machine. Clifford Stoll, astronomer, in 1995, wrote in Newsweek, he said that the truth is no online database will replace your daily newspaper. No computer network will change the way government works. Okay. Steve Ballmer, Microsoft CEO, 2007, said there's no chance the iPhone is going to get any significant market share. I could keep going. Maybe I will. Joe Nocera, he's a New York Times columnist. In 1999, he said the idea that Amazon can be the Walmart of the web is silly. New York Times, 2006, said about YouTube, a site for home videos, a little weird, mostly useless. And here we are on YouTube today. John Malone, media mogul, 1994, said people will never watch TV on the internet. Look, I don't want to call these people out, but I just did. But the reason why is because of the paradigm shift. It's really hard to see it. Most people would rather be wrong because it's comfortable. And that's why over the last decade, people dismissed Bitcoin as a scam, right? They missed it under 1,000, 10,000. They missed it at 50,000. Right now, we're living through the same thing. The world's shifting from bonds and fiat into the debasement trade, into Bitcoin and gold. But most investors are still trying to explain today's world with yesterday's models, right? They're still looking at asset prices in dollars or whatever the local fiat currency that you use. And when you measure it that way, of course, it looks like a bubble. It looks like, Bitcoin at 125,000 is about to collapse. It looks like gold at, 3,900 is overheated. It's overbought. Now, that's the illusion of measuring everything against a debasing currency. It's not that Bitcoin and gold are in a bubble. It's that the denominator is dying, right? That's why they can't see it. That's why the wealth transfer is going to happen much faster than people can even understand. Most people are still using old models to explain this new world, okay? So, what are the new models? Okay, this is where it starts getting interesting. I love cycles. I love watching one cycle end and the next cycle start, and I like the overlap of each one. We're watching two cycles, two paradigm shifts converging at the same time. Now, the first one is a monetary and a financial revolution cycle. It happens about every 80 years, okay? This is about how long the current bond market took to rise, reach maturity, and then reverse all the way back down and collapse. Now, at the same time, we have Bitcoin, which is the first monetary asset in over 500 years. It's scarce, unconfiscatable, permissionless collateral. That's why it's no longer just speculation. It's becoming the foundation of this new financial system, right? It's the smartest money in the world isn't just buying Bitcoin to trade it. They're building yield products, treasuries, corporate balance sheets all around this. They're engineering an entirely new fixed income market on top of Bitcoin. Now, the second cycle is technological. About every 50 years, we get a quantum leap. We get a convergence of new technologies. So right now, that's Bitcoin and AI. And these are not just another tech trend. It's an exponential curve colliding with the monetary reset. So AI is driving productivity. It's disrupting industries. It's accelerating capital flows faster than our intuition can even track it. And when you combine AI's exponential growth with Bitcoin's absolute scarcity, you get this flywheel effect. No previous generation has ever had access to that. All right? This is why the so-called debasement trade isn't just a short-term hedge against deficits or shutdowns. It's the front row of a new wealth cycle. It's a cycle where bonds and fiat aren't the bedrock anymore. Their liabilities. Now, Bitcoin and AI become the twin engines of growth, value, and security. Right? That's the shift. That's what most people can't see at this point. Right? They're still measuring assets in dollars, still trying to explain today with yesterday's models. But the investors who understand this, who position now, are effectively front-running the largest reallocation of capital in history. So here's the bottom line. The 40-year bond bull market, it's over. The debasement trade, it's here. The $300 trillion worth of capital, it's now on the move. So what does this mean for us? Well, it means that if we're still relying on a 60-40 portfolio, if you're still trusting bonds, if your financial advisor is still using the same playbook, then you're fighting the last war, right? That strategy, it worked for your parents, but it's not going to work for you. Here's why. It's a simple but yet powerful thesis. Governments can't stop running deficits. They can't raise rates without bankrupting themselves. They can't default without political suicide. That leaves one path: financial repression. What does that mean? That means savers and bondholders will be sacrificed as they're liquidated. Inflation is going to run hot. Bonds are going to have negative yields. And at the same time, this hot inflation will increase the dollars in circulation, and your purchasing power is going to continue to bleed away. And what almost everyone is missing is, even if they get the first part, but they're still measuring everything in dollars or whatever local currency you're in. That's the problem. That's the illusion. They're measuring wealth against a debasing currency. It's not that Bitcoin and gold are in a bubble. It's that the denominator, the dollar, is dying. And the longer you keep measuring your wealth in something designed to lose value, then the poorer you're going to feel, right? No matter what the asset price says. So you got a choice. You can either cling to the old system, the familiar, and watch your wealth get slowly liquidated away, or you can build a new operating system for your money. One designed for the world we're actually in, not the one we grew up in. All right, so how do you play the debasement trade? Well, here's 3 core principles. Number 1, shift your denominator. You have to stop thinking in dollars. Start measuring your wealth in hard assets: Bitcoin, gold, productive equities, things that can't be printed away. So for example, how much is gold priced in dollars? How much is gold priced in oil or priced in Bitcoin? Same for Bitcoin. Is it an all-time high in dollars, or is it an all-time high in gold or oil? And when you price it in gold, then you can see that we're nowhere near the top. We're nowhere near all-time highs. We have plenty of room to run. It starts looking different. Number 2, balance scarcity with cash flow. You see, gold and Bitcoin preserve value, but they don't yield by themselves. But if you pair them with productive assets or new structures like Bitcoin treasury products, then they create real income. Or you can harvest the appreciation from these assets with debt and leverage. Number 3, stay early, stay adaptive. Because by the time Wall Street reaches consensus, the biggest gains, they're gone. You got to position yourself ahead of the crowd. Then you keep adapting as the new system continues to build. All right. This is how you turn the debasement trade from a defensive hedge into an offensive wealth strategy. All right, now if you really want to understand the bigger picture, right, the convergence of AI and Bitcoin, the 2 paradigm shifts colliding to create the next wealth cycle, and the exact assets and stocks that I'm buying right now to profit from this while the old paradigm collapses, come join me live next week for the Quantum Wave Investment Workshop. It's live, it's free. I'm going to break all this down, the charts I'm watching, the companies I'm positioning to buy right now. Most importantly, I'm going to answer all your questions live. I'll put a link in the description down below. There's a QR code right here. It's free. I do limit the spots so I can make sure to interact with everyone. So grab a spot, don't miss it, because the window on this shift isn't going to stay open forever. And if you want to go deeper right now, the next video you should watch right now is titled "The Wealth Boom the Government Doesn't Want You to Keep." And I'll see you over there.